Morning, traders. Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thanks, Marty. How we doing in YouTube? Are we happening? Okay, thanks, everyone. Welcome to the Traders Lab. I'm your host, Tom B. Once again, I'm streaming from Costa Rica, and I'm in a challenged technical situation here with a failing laptop, no external monitors, and the rest of it. Hopefully, this will be resolved starting next week, so thank you, everyone, for your patience. By the way, if I do drop out, I will try to restart. It could take a few minutes if you're in YouTube. As usual, please be patient. Also, please be aware I cannot see the chat in YouTube since I'm restricted to one monitor on my laptop, and I'm using my phone to monitor the Bookmap Discord TraderLab community. If you're interested in participating in the TraderLab community, there's no cost for it. There is a link in the bottom of YouTube, and not only can you access the TraderLab, which is really for traders, by traders, and is about the business of trading, creating sustainability, a career path, understanding the reality of what trading really is, not our fantasy of what we would like it to be. And if that's something you're interested in, if you're a developing trader, and by the way, developing, it doesn't mean time. We're all developing. It's just where are you, and are you waking up in the same place despite random winning trades? The randomness is what traps us into something I call trader groundhog day. Work hard, wake up in the same place. A lot of that has to do with the randomness is the big trick, I think, or the gotcha. Random winners, all it is do more of the same and try to get more winners, of course. But in a random environment, if you have random inputs, you're still going to have the same outcome. Winners, losers. But if you're leaking equity in spite of it all, then it's because you don't have a plan that is built for this actual business. You're responding to psychology of trying to get certainty, squeeze risk out, and all that, which we all understand. You may not understand it because the choices you make are not based on the business. They're actually based on primal wiring to avoid risk, create certainty. So that gets us random winners. But that might not be sustainable. And if that's your experience, welcome to the club. It's part of the path that we all embark on. But to change the outcome, you need to change the path. Hope that makes some sense. And again, welcome to TraderLab. Let's get going. Got a lot to talk about. And remember, if I do drop out, I'll do my best to get back. If you're in YouTube, it will reset, hopefully. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. I'm going to give you some statistics, some idea of what is happening, why it happens, and then, of course, it's all random anyway. But if you can, shall we say, put a process together, at times you can get in alignment with the business. This is really what the business is. Understanding the market, understanding change, understanding alignment, having structured trades that get in that align with the current condition of the market, and recognizing change. When the market changes, it's not mechanical, it's process driven. Trades that are, shall we say, qualified in certain conditions become disqualified as the condition changes. It's not a one size fits all. It's not mechanical. It is very much a process, and it is alignment with something called the auction. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but I do interact on a regular basis with TraderLab participants, discussing the market condition and encouraging them to develop process and to manage the emotional stimulus, which is fight, flight, certainty, and the rest of it, of course. So that's part of us. Now, the other part of this, what is really TraderLab all about? It's about understanding how the market works, why it does what it does, how you can at times get in alignment with it, and vet structured trades so you can anticipate where the market might come, anticipate triggering processes, and then use a high-tier order flow tool like Bookmap to kind of drill inside so you can get potentially an edge over other traders who really may not have the same advantages you might have. And that's always, up to you, and you can measure it. Do you have advantage? Well, let's take a look at a process and let's see if this resonates with you. What are we actually doing in the TraderLab? Here's what we're doing. How does the market work? It is an auction. What is this thing? Auction market theory. I know you think Igor is over there turning on the electrodes and everything. It's not. Auction market theory is market mechanics. Why do we have a market? Because the job of a market is to try to identify extremes of behavior. In other words, what's too high, what's too low, and what's fair. It's shopping. If you know how to shop, you're already trading. You didn't think of it that way, did you? But when you go to the store, if the price is too low or under a fair price, that's called a sale. And let's assume it's your can of tuna. You throw 20 or 10 in the cart, right? It's a sale. Now, they don't keep it on sale indefinitely. This is the different time frame than what we do, but it's the same concept. Then the price comes back to a retail price. What's retail? Buyers and sellers agree to do business. All right, I'll give you this. Here's $1 for the can. And they say, all right, I'll sell it to you for $1. That's an exchange of currency for a product. Okay. Now, our product can be S&P. It can be gold. It could be oil. It could be tuna. Now, the other side of that is, suppose the price of your tuna goes up to $2 a can because there's a shortage of tuna, or one manufacturer has that really nice tuna and it goes to $2. Now, what are you going to do? Are you going to pay it? Well, if you have to have the tuna for the casserole tonight, you might pay $2. You're not going to like it. But most other participants will not pay $2. If the producer of tuna wants to sell the tuna, they're going to have to lower the price to attract the buyers. That's a rotation, isn't it? That's the auction. Now, as day traders, we take that concept and move it down into shorter time frames. In the store, big time frame. Doesn't change much. In our world, it's changing constantly in all time frames. So I hope that makes sense. Now, how do we see this behavior? It's the volume profile. Volume profile shows us changes in volume, which represents too high, too low, and it's doing it in all time frames, overlapping each other at the same time. So you might say we're in a bull market, right? But the market can be going down in our time frame. Does that make sense? So we have to find a way to identify or codify the actual time frame we operated. Now, this brings us to something called context, and this is the thing that's going to throw you, kind of get your brain into the Cuisinart. If let's assume we're in a bull market, we just made a new all-time high, maybe, okay? So if we at the moment think it might be a bull market, then why might we get short? Because in the time frame we trade, in the rotations we tried, we might want to take shorts even though the higher time frame is up. So how do you operate in multiple time frames? Well, this is what you can learn in what the auction is in your time frame, and the condition or context of the market is going to be different depending on your time frame. How do you like that? So we have to sort that out and codify or define it so we can operate in it. This is what you can learn in TraderLab. And then what about this order flow? What does that do? Well, this is where Bookmap comes in, because now we can drill into these time frames to see participant behavior, and that takes it down into absorption, sweeps, icebergs, stops, etc. Liquidity, passive order, the order book, and the rest of it. This is a graphical representation of the behavior, and we can get down into the micro, even the nanoseconds if we want, which for me, I can't read a nanosecond, but I can bring it to a place where I can read it graphically and my mind can recognize it. That gives me edge. So this is a business of edge. And edge is statistical, it is conditional, and what the idea of TraderLab is to help you understand all of this, put it together into a cohesive plan, and then for you to extract the statistical edge. We cannot predict what the market's going to do. I know you think you can, and that's fine. Me, I'm doing this 47 years. It took me a long time to figure out, I don't know. And the thing about not knowing is it releases me from becoming myopic, and it releases me from thinking I'm in the business of prediction. I'm not. I'm in a gaming business, and a gaming business is where you have control and where you let go of control. We control what we do up until we push the button. In the casinos, they control how they play their games up until they deal the cards. The cards are random. how the gamblers play the cards is random. The casinos have no control over that, do they? What do they control? How they play the game. And they only play games that have an edge that favors them. And they do accept they have cost of production and overhead, then they are going to pay the gamblers. We are also going to pay. So if you're in business, you have overhead and cost of production. Personally and emotionally, we look at it as it's a right or wrong thing, and it's an acknowledgement of your brilliance, your self-esteem. It has nothing to do with it. This is a business of statistical probabilities. And the only way you can measure yourself, in my opinion, is did you follow your plan? Now, if your plan has an edge, you're sitting at the house side of the table. Same as the casinos. And I think they've done pretty well. Also, the casinos haven't figured out how to avoid paying the gamblers. What makes you think you can? Let's go from there. Does this make sense? And welcome to the TraderLab. And there is no cost for TraderLab. If this is something that resonates with you, and you've already kind of gone down the path and you keep waking up at the same place, that's Trader Groundhog Day. That's the term I use for myself. Work hard, wake up in the same place. At some point, the light bulb will go off and you'll go, maybe there's a better way to do this. Maybe you can learn that in the TraderLab. Let's take a look. This is Investor RT. It's my higher time frame software. It also exports to Bookmap, which is very convenient levels. Now, I want to show you this. Now, if you look at candles, this is what you're going to see. Now, what happened yesterday? Well, we did the Acapulco cliff dive, and all the longs in here got taken out. Notice market rotations. Remember, now this is RTH. If the market gets long, we can take out, this is the green lenders, take out the longs and trap the shorts. If the market is short, we can squeeze the shorts and we make a new all-time high. If the market is high, we can take out the longs and trap the shorts. Now what? What do you think? Now, when you look at this, what are you thinking? You're going, wow, it's bullish. It's a higher time frame bull market. Let's get long. Maybe, but it's a Friday. What might happen on Friday after a wide range day? Well, a couple of things. If it's a long-term, higher time frame bull market, we can go up, of course. We can squeeze the shorts, of course. And we can also have an inside day, of course. And do you know? I don't. But let's see what we do know. Let's look at what we can know. I'm going to show you something else. Now, I'm going to take you into something called the auction so you can understand. Now, these yellow boxes, just so you know what it is, it's called the value area. It's a market profile term. And what it does is it's showing us where most of the volume took place yesterday. This is yesterday. 70% of the volume took place in here. So I know this looks like a tail and it's in excess. I know I blew out the longs and I have shorts. That says to me, if you're short, we can have buyers to cover. And it also tells me I can just stay in here. I don't know. You? Well, let me know if you know, because me, I have no clue. I am clueless, but I'm not ignorant. And you got, in my opinion, to start out with knowing you don't know, and it's a business of alignment. Now let's go a little further. These yellow lines are called volume points of control. They are retail prices or high volume. Let's just get an idea of how this works. If this is the retail price, as an example, just give me an example, or even over here, retail price, notice if we come down and it's too low, we can lift off. Notice if it's too high up here, we can push off. Notice if I come down here and there's no precision, I can push off. Come down, too low. Go up, too high, too high, too high, too low, too high. Hey, sell stops under here. Thanks for playing. You get a coupon to the buffet. New retail price, too low. What was too high? There. No precision. Too low. What's too high? There. New all-time high. Too low. Too high. We're out of here. Flush the financial, you know what. Short covering, new buyers, retail price. Everybody with me? You guys follow it. This is the auction. Now you're going to look at this and say, how can I predict what it's going to do? Here's a clue for you. You can't. What you can do is understand what creates levels and interpret what they mean. Now, from yesterday, the retail price was, make sure I got this right here. Here. The high volume price going up in time frame from this swing low, which is in December, to this swing high, the high volume is 45. I'm going up in time frame. So for all this volume from there to here, this is called the volume point of control. It's called a micro composite. Think of it as intermediate time frame. Going down in time frame yesterday, that's the retail price, shorter time frame. So we're starting out with value area, potential extreme, intermediate time frame, high volume. Yesterday's time frame going down, high volume, and then we're going to drill down into micro. Okay, is everybody tracking? And remember, if you have questions and you're in YouTube, thanks for visiting. I can't see them. So go to TraderLab, use the link in the bottom of YouTube. So today the possibility is the following. Grab your pen and paper again, take a couple of notes. Now go to if you're in TraderLab, grab your context grid sheet. There's a library of webinars in the TraderLab available to all of you at no cost. The primer webinar you should watch first. It's got about 36,000, maybe 38,000 views. I don't keep count, but it's about an hour. You might find that one interesting. And then there's a document section. Ned, by the way, thanks for curating this for TraderLab participants, and to all TraderLab participants who participate, thank you too. That's what makes the TraderLab special. We are opening in range inside of yesterday's value. So let's look at this. Let's try to figure this out, maybe. Come on, Bookmap. By the way, my computer's the problem. It's not Bookmap. So this is what we have. Let's try this again. ETH high. Let's go a little further. You'll see how this all comes together. And again, nobody knows. Yesterday's high. There's stops over yesterday's high. Yesterday's low is way out there someplace. Whoop, just disappeared. Thank you. Appreciate it. This is a problem with my computer. I lost yesterday's low down here someplace. We are opening in range, in value. You'll see this will come back again over here. Hate when it does that. What do we anticipate if the market's opening in balance? What's balance? We're opening inside of yesterday's range. We're opening lower inside of range, and we are opening in value. Value is where 70% of that volume took place. It would be nice if this shows up again. So we're opening inside of range, so inside of yesterday's high and low, and inside of value. Right away, that suggests to us in the TraderLab that we can have two-sided trade. And don't forget, yesterday was kind of an outlier, it looks like. We blew the longs out, and then the buyers came for it, bought it on sale. If it's on sale, what do? Yeah, we buy it if it's a bull market. So this is called value area high. This is the RTH open. Yesterday's low is down below. I'm not going to mess with it. And there's value area low, the outside edge of 70% of the volume. Let's go a little further. We have that naked volume point of control. This was the retail price. Go back to the store. And then in the ETH, the last auction, this is the overnight volume point of control. So think of it like retail. Now, just to make you a little crazy, because I wouldn't want to not disturb you. In the intermediate time frame, that's the retail price. I'm now in multiple time frames, and it's conflicted and confusing. Don't worry about it. We're all conflicted. We're all confused. Get used to it because it's random. So don't worry about it. Adapt. Learn how to operate in uncertainty. Don't try to squeeze uncertainty out. You can't. You have to change how you participate and how you operate in the environment. That's try to get in the environment to fit you. You have to adjust to it. Have you ever thought of it? So you're seeking certainty and prediction, and being right has nothing to do with this. Where does that come from? It's all psychological. It's all socialization. It's all looking for approval. You can't get it here. So don't look for it. Look for something else. Look for probabilities and look for what is right or wrong. A winning trade, or is it following a plan? What is right or wrong? Are you concentrating on P&L, or are you concentrating on plan? Are you measuring yourself and thinking about profit, which is what most of you do, or are you focusing on process? Because what creates the P&L? The process. So how do you measure yourself? What's right or wrong? Not the individual trade. It's following the plan. You can't follow your plan, you're on your way out. The door hasn't hit you, you know where. It's just a matter of time that you're gone. You have to change your beliefs, and you have to understand what drives you to make choices. Now, I got to show you this trade. This trade, now a lot of these trades are narrated by me. I don't call trades. And the reason for that is my goal is to help traders get over the learning curve, not to turn everybody into a financial printing press. You've got to walk before you can run. So let's talk about what this means. Now, we are opening in range and value. What does it mean? The market's in balance. What are we looking for potentially? Likely what's called a neutral or low conviction day. What is a neutral day? Balance. How do we identify a neutral day? We identify the behavior as being potentially two-sided. Now, we know this before the open, and we know we can take out the first hour's high and low. Doesn't mean we will. Has nothing to do with it. So that's for openers, and that's based on where the open is. Now, let's remember, overnight volume point of control is the last auction because that's ETH high volume. Where are we? We're opening above the high volume price from yesterday. We're opening at the time, I don't remember where the full session VWAP was. Forget that for the moment. And we're opening inside of value. So the targeting then sets up somewhere. Let me try to find it. So I'm anticipating, all right, that we're going to trade inside. So are we breaking out of the prior day's value area? This is where I would need to clear to now have extension further. So this is my first possible target. My other target is going to be here because we opened above the retail price from the last auction, which is the ETH, and I can also go here and, wherever, 45, and I can go to value area low. That's already the probabilities before we even start. Is everybody with me so far? And remember, I can't see your questions unless you're in TraderLab because I can't access the chats. Now let's look. So first trades. Now guys, before we start, we already anticipate. Now let's grab our statistics. Oh, really, Tom? Why are you wasting my time? You're saying. Get to it. Here's how you get to it. You're trying to create edge, and you have to do what the video players, the video gamers are not doing. That's preparation, trade plan, statistical probabilities. It's all about edge. So you can react. So we're opening lower, I believe, because settlement's above us, right? Somewhere. There. Lower, so we have ETH high, settlement, value area high. Here's some statistics, and you have to vet these all for yourself. Taking out the first hour's high or low is a 98% probability. Taking out the ETH high or low is a 97%-ish probability. Getting to the previous value area high or value area low is a 91% probability. Getting to the previous high or low is an 87% probability. Getting to the overnight or ETH mid as an 81% probability. Getting to the overnight volume point of control is approximately an 80% probability. These will come back. So I'm not going to wait for them. They will pop back in. So the first thing I'm looking at, this is the overnight volume point of control, the yellow line. So let's try to look at what happens here. This is my retail price. Be nice if this comes back. I would really enjoy it. Sorry again for the technical problems. It is my computer. And remember, if I drop out, it's technical and I should recycle. If everything comes back, probably about 3-4 minutes in YouTube. So just be patient. Okay, this is the RTH open. Yeah, my levels are back. Now there's an 82% probability. Now, something to understand. Let me see if it is in here. Yeah. Where is this? Let me just look, guys. I got to try to get myself oriented here. First trades are longs because higher time frame trend is up, but we're opening in balance. This has an 82% probability. Down below, the point of control, I have to give that one to you. Didn't give it to you. That has about a 68% probability. Taking out the first hour's high or low, we can take them both out. That's about a 29% probability, but we're opening in balance. If I open in balance, I anticipate two-sided trade. I know that. I don't know what it's going to do. We have to get over predicting being right, and I mean that. When I say that, and if you're focused on P&L, you got a problem you don't even know, because this is not a business of P&L. The P&L's the output of a plan with Edge. It's not the input. If you're trading your P&L, you got trouble. Big trouble. This is absorption, and right here, this is prior to RTH open. Right here, we have absorption. Now, this doesn't mean you do anything. Watch. And we know the market is short. So what do we know? Possibility of two-sided trade. That's the first thing I know. Here's the other thing I know. 70 has resting liquidity. Now we're looking at order flow, and we're all clueless. Watch. By the way, this here, just so you know, this is the overnight volume point of control. We actually had a trade in here in the ETH that's called mean reversion. I'm just mentioning. These are buyers, see them? Now, this doesn't mean anything other than you would know before the RTH open that you got buyers here. This is how order flow, because when I have sellers and it goes up, that means there's absorption. These are sellers, right? That's a seller going to zero, except buying. I come down, and who was over here? Just give you a little something to think about. Buyers. That's why it went up. What happens if I come down to where the buyers were? Here's a very simple concept for you. If the buyers thought this was a deal, you in the shopping cart again, and the tuna goes on sale again, and you were willing to put 5 in the cart over here, might you throw 2 more in? You know, it's like, oh, look at this in the back of the shelf. These are the old price. You ever done that? In the cart. So, RTH open. Let's look. Now, overnight volume point of control, aggressive buyers. Let me try to get this. Now, this data can be off a little bit because of the lag I have with the computer. So let's go on the assumption that you could not get this because it took off right on the RTH open. Okay? Let's watch. Now, what do I know? Liquidity here. Now let's watch. If we're opening in value, what do we anticipate? Context grid sheet, two-sided trade. If I'm in a fair area, that's called value area. And now it doesn't mean we can, remember, we can't predict, but what you can do is you can narrate it and you can anticipate. No, remember, no prediction. What do we anticipate? Two-sided trade. Now, if it breaks out of value, Then we're going to go into overdrive and maybe continue higher. Maybe. And check yesterday's high. Not high on the hit parade, but hey, can happen, right? Who says it's not going to happen? I don't. I always say maybe. That's the best you have. Write that down. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. But there's no such thing as it will. It might. So you operate in a maybe and you operate in a might. So how do you deal with maybe and might and who knows? Randomness. You deal with narration and narrating and defining change. Let's see what we get. So we get our blast off. We hit our liquidity. Now let's look what happens here. This yellow line is called developing volume point of control. It starts at 0. Now, remember I showed you those yellow lines. They are volume. Now, but in the intraday time frame, as it develops, as the volume comes in, this is going to move around. This is the shoppers, real-time shoppers in different time frames as you think of them. Now, order flow is not time-based, so you understand. It is participant-based. And I want to make it, I really want you to understand. Now, it's up to you. You do it whatever you want to do. I'm not here to tell you what to do. It's not my job. I'm here to share with you what I've learned in 47 years of doing this. And that is the clock is something we have created that we overlay to define things. In other words, we want to put it in a little package and it's rigid. Well, trading is not a rigid process. Now, you can use time frames. I mean, RTH is open, high, low, close. That's fixed. We can see that. But during the day, what does 5 minutes, 3 minutes, or anything have to do with anything? I mean, you can use that. That's okay. But when we get down to this level, it's not time. It's behavior. It's absorption. You know, see what I mean? It's the interaction with the liquidity. So this is developing time frame. Now let's translate it together. Let's watch. Microstructure. This is the retail price. It starts at 0. If the volume moves down, this is microstructure. Now I'm down with the tweezer here, so don't come after me with a pitchfork. I'm just going to show you mechanics here. Let's talk about a language. This language says in the microstructure that price is too high. Think this is your shopping cart in the mini mart. I don't know. We have to attach trading to something I think that we already understand. If you can think of this as shopping, like in your supermarket, or you go down the street to the mini mart, there's an auction taking place. When you go to mini mart, there's going to be a fair price for the mini mart. But if you're not going to pay it, you're going to leave the mini mart and go shop someplace else. So in a micro, this little thing here is an auction. That's fair in the mini mart. I'm not paying that. Yeah, but it's on sale. Retail. And then you get in the car and you leave it. Sorry. I'm apologizing in advance because you're probably rolling your eyes back in your head. Watch. Well, something's really weird. Hold on a second. Watch. So let's look at this. If this is too high, I can go down. And right here, I had this liquidity. I'm hoping this is not even 10 seconds, okay? This is the RTH open. So we're not even in here. This is 10 seconds. So you can see this is not an actionable process. But let's look at what it says. Too low, too low. This was too high. If I get above it, I can go up. Where are my targets in here? I have value area high, which is my first target. I have overnight VPOC, my last retail price, and I have this below me. So I have overnight. So I have overnight VPOC, naked VPOC, and I'm looking for two-sided trade. Do I buy it here? Not necessarily. Let's see what it does. We're looking for two-sided trade. VPOC migration. I'm not paying that. What happened up here? Retail price. You got to be kidding. Break low. Where's my retail price from the last auction? It's here. What is this? Absorption? Let's look at it. If I'm looking to trade towards an extreme, which is either value area high, ETH high, settlement on the upside, or this, the retail price from yesterday's RTH, I got a target there, I got targets above, and I have what? 82% probability to go there. The retail price. So what happens? Too high, and I'm anticipating two-sided trade. Now, this is where things get interesting. What side are you going to trade from? Do you know? If I'm anticipating two-sided trade, I already know where the market might go. I don't know the sequence. I don't know how. I don't know if. I don't know when. Nobody does. So that's not your job. Your job is to wait. Now, right here at the time is the full session VWAP. And we're early. So I can buy it here if I get a trigger to go there and to come across the range to go for that. If I can't get here, then my next location is going to be here, come back across the range. These are structured trades. So let's just see what it does. Now, this is the first long. This is narrated in TraderLab. If you guys are going, well, how do you know? Here's as they say, the straight oil from the can. Clueless, but not ignorant. Big difference. Always clueless, but not ignorant. Let's come back and look at this now. Let's look. So this is what I do. Not saying it's a good plan, just saying it's what I've figured out. And what I know is not what's going to happen. What I have to do is be disciplined and know where behavior might happen. And I know this was the high volume price from the ETH, right? If I know that, then I can look at this as I approach it, and I have no idea what it'll do. I have this as a location, I have the overnight mid, and I have this. What are the statistics, by the way? Naked volume point of control is 68%, and the overnight mid is 81%. I got about a 67%, 81%, 82% here. Value area high or low, 91%. 31% probability to take out first hour's high low. That's what we're starting with, and I'm clueless. I have absorption here, no clue. Sellers are here, buyers are here, break high. And what's the term we like to use in real estate? Overnight VPOC, location, location. Break high, trigger, and I'm looking for reversion. Now, if this is not your trade, you don't even take it. But it is what's called mean reversion. Outside in. This is the shopping cart. And this is the current retail price. The nature of the market in a balanced market is to return. Let's watch. And where was my sellers? They're up here. There's the price in the mini market. And let's go a little further. What else do I know? Value area high, outside edge. There's more. Now, this is called VPOC migration. Let's watch this. Now, as we come up, we're going to be talking about order flow. Now, when you break here, let's look at the language of the market. We tested this overnight VPOC, which is, let me get this open again for you. I got to show you the levels, why this is all material, and how you can use the auction. Come on, let's go. There. This is the fair price. If I come down and snap back from it, then it's too low. And where's my developing fair price? It's this. So I can do is get long, scale. This is resistance because it was too high. If I come across here and I can hold this, then I can come to the other side. And remember, I'm anticipating two-sided trade. And Where am I going to try to go? Here, value area. And there's more. And since I'm clueless, ETH high over 90% probability. The 98 actually, take out ETH high or low. Pick one. And settlement, right? So I'm targeting this, but this is my next target, value area. Let's look. I get a sweep. Sweep suggests counter rotation. Now here's the choices, and you have to have a trade plan for this. When you get this sweep, the possibility is break. This is a potential reversal trigger, and it sets up right there and there. And you don't know, and neither do I, because we're all ignorant and clueless, because we can't predict. But let's look at what is sitting here. Liquidity. Doesn't that give you a heads up that there's a limit order? In the limit order book, we have stacked liquidity, and that's the highest liquidity. Don't we know, because we can see the order flow, that if we get into the liquidity and there's absorption and I get a sweep, that if I can't hold above this and I get below it, now I have a sell trigger. And this is my resistance. It's right there. So what do I do here? Right here, I have a trigger. Teeth start chattering. I've got to regain this. My micro high volume is right there. This is reversion. This is micro mean reversion. In here, and this is conceptual. Think about this. How does the market work? Now you see this and you're looking at your whatever you're looking at. I'm not seeing what you're seeing. I'm seeing the participant behavior. This is icebergs that are absorbing right here. I mean, why is this? Why did it go up here? Yeah, it did. But are there sellers here? Yes. Now, if I get above the sellers and I have no buying above them, isn't this exhaustion? And might there be more sellers here absorbing? If I break below, now this is resistance. And the micro high volume, where were the buyers? Let's look at this. Buyers are here. That's absorption because the sellers got absorbed. Buyers are here going to the moon. What's that? Sweep. They got absorbed. Buyers are here. Buyers are there. I'm above this, going to the moon. More sellers here, being absorbed. No clue. Where does it change, Tom? Right there. Because the buyers are there. Buyers are there. Sellers are now below the buyers, right? Now, this is absorption here. The buyers that were here and here are now here. That's what this did. Right here, I got my sellers. They're being absorbed. But what happens? There's more sellers here. Those sellers, sellers. So I have sellers, buyers. Right here is my over-under, and that little node sticking out is high volume in a microstructure. This is like your volume point of control. It's the same as that, except it's up here in a mini mark. Same process. This is called mean reversion. Coming back here is called mean reversion. Let's see what it does. I don't know. It doesn't do it. You see? It's okay. I come down here. It doesn't matter. I come up. It doesn't matter. I break down again. Very volatile. What am I looking for, though? Two-sided trade. I have this is sellers. You can see this. Now, if I took this, just so you know, all candor, if I took this trade here, my stop would be over here. I'd get stopped out. No big deal, other than how I feel emotionally. Break low, new retail price, multiple time frames. If I get under here and this is too high, I can now come back across the range. I'm still trying to go to value area because that's my target. Where do we go? This is where we're trying to go. And now we're back down. Let's look at this. This was too low. Remember, this was our lowest retail price. Two-sided trade. You can get your brains beat in here. We know this is too low. Overnight volume point of control. We had our buyers there. We come down here. And since it's two-sided trade, we're looking for two-sided trade. The lean initially, for me, is the long side. No shorts for me. I only take a primary side. And as they say, let the chips fall where they may. Right here, I have absorption. There's no way to know until you get this. When you get the change, now the micro volume is in here. Break, and now this becomes a support area. There is a long, and this is where you're trying to go, mean reversion. And then come back across the range. Very annoying to try to trade this kind of balance. Let's watch. Now, what would happen here is if you took the long, you'd scale. If you can't, this is now resistance. If you can't clear resistance, and this is trade management. This is mean reversion. Underline the term mean resistance. If I can't get above here, I'm going to take these longs out. If I come down here, full session VWAP, what's our trade? We can take the full session VWAP, come across, scale, and then the shorts, since we're imbalanced, that are in here can become buyers, and our target is this. We're still trying to do this. And I have liquidity comes in right here. So I have to be aware that if I come up here, I have buy stops here and my sellers were here. Why would liquidity come here? Because possibly we're going to have icebergs and there's going to be buy stops. Icebergs need liquidity or buyers to sell into. So they're front running the stops potentially to get filled. My target is there. So you can be out of the trade here or you're going for this. It's a high probability target. Let's just see what it does. Now, there's your sweep. There's your target. This is order flow. Now, sweep, target, change. Now, when we come back here, we have to look at this. This can be what's called an order flow trigger. And this is how it works. Break high, going to the moon, target, who knows? And there's nothing saying it won't go here or here. They're all statistical probabilities. This is a sweep and order flow trigger. If I get below it, then it might suggest I'm going to come back across the range or not. Now, what I always suggest to developing traders in TraderLab, I want to show you the structure, by the way. Let's look at this. Order flow trigger, no idea. Break low. Where's resistance? Let's look at this. Now, the way I suggest traders develop is pick one side. You're not going to be able to, to trade both sides when you're developing. If you can't become profitable with one side, you're in FOMO world because you think it's your greed and your profits. It is not. If you can't trade one side, you will trade no sides. There aren't too many guarantees I can make you. But after doing this 47 years and training traders, I see what creates failure. It's Hyde, the lunatic who can't control themselves. And if you don't learn about yourself and the choices you make that are driven by psychology, not learning how to participate and operate in this business, you'll go out of business because you think it's a video game. I'm going to assure you this is much more than that. So this is the order flow trigger. I break low. This becomes resistance. This is a micro trigger. Notice what you have. Up here, too high, resistance, 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 break low. If I can't get back above here, Then what? Back across the range, potentially. And why, you're going to ask me? Because we're in balance. And now I check the value area high. If I can't leave value, that says potentially then two-sided trade, and remember the context spreadsheet, neutral day. What is a neutral day? It's taking out the first hour's high and low. That's already, we know that. This IB high, it's called initial balance high. It's the first hour high or low. And the probabilities, we're going to take this out, and we're going to take out the first hour's low. We don't have to do either. We could do neither, trading, right? So what we know here now is we have a sell, and it's either an exit if you're in TraderLab, trading the primary side, subject to your experience. And where are we going to try to go next? Let's look. Don't forget, this is a long down. This sets up the short or exit. What is this? What's our next target? Wasn't it that? Balance. Let's look at this. This is a long. Now, you're probably going to say, I can't do this. Or you may say, where's the bucket? I'm going to, lose my breakfast. This is rotational trading. It's a specific condition that you would learn in the TraderLab. Now, one of the problems, of course, like many, is realizing you're in this condition and you're not in a trending configuration currently. If you're in a rotational configuration, if you're in TraderLab, you have a specific area in your trade plan that says outside in only, not inside out. So we're not going to trade in here. The mid and the VWAP basically don't exist in this configuration. What exists in this configuration is what's too high, what's too low, and retail. Remember what I showed you at the top of the stream. We can come down to yesterday's RTH level, and if it's too low, I can check it and go higher. What else do I know? Remember this, the first hour's high or low, over 90% probability to take out one or the other. And that's at 9:30. If I got short, and by the way, I forgot to mention this. This is a short. This is an order flow trigger. I narrated this in TraderLab. I don't remember anything. I don't remember it because I'm always in the moment. This is a short. And if you took it, at 9:30, you have over 90% probability of taking out the first hour high or low. If you take out, and you have this as a target, and you have the overnight mid as a target, I come down here, I can get long, and we discussed this one in TraderLab, and this is mean reversion to come back across the range. So let's look at that. And this is called balance. And I narrated this one. Isn't this maddening for you? Why? Because you're thinking you don't understand the condition, you're going to have a problem. And by the way, we all have a problem because of randomness. One moment, please. Don't go away. Sorry, guys. I think my power supply is starting to melt over here. That's pretty encouraging. So, hey, guys, in case I disappear, I'll try to come back. So, liquidity, location. Now, we have a structured trading TraderLab called the IBF. I made it up. I don't know. I made these up. And by the way, there's 60 PDFs of structured trades that I share, and they're all available to you in the TraderLab. Now, so you understand, there is no plug and play. Sorry to disappoint you. We all want plug and play. I want plug and play. I want 2 ATMs moved into the basement, and I'll just show up and push a button and I'll make a withdrawal. How's that working out for you? Didn't work out so good for me. So there is no plug and play. That's why you can't go to chat rooms, gurus, educators, and influencer trader wannabes. Get the only one thing you need. You see it all the time, and somehow still get the random winners because a dart has random winners, and a random buy-sell generator has winners, but no edge, no sustainability. You're on your way out. It just hasn't hit you in the butt. Unfortunately, that's the real world. And the idea of TraderLab is to help you understand the business you're attempting to be in and not blow smoke in the wind. So here's order flow, here's liquidity, comes into the book. What does it mean? Let's discuss the language of the market. I don't know what it's going to do. Let's get over it. But I know where. That's the difference. So I know I got over 90% probability of taking this thing out. If I come over here, and let's assume I don't sell the high of the rotation because I'm sitting here in my Barca lounger. This is an order flow trigger. This suggests a counter rotation right here. This says, okay, but 90% probability to go here and about a 67% probability to go down naked volume point of control. Why would I get long? And it might go up. I don't know. So right here, order flow trigger. This says up. Break down. Right here, I'm below this now, and I have my statistics. Why wouldn't I go for that? If I wanted to. I can sell this, stop will go there, and then I'm scaling. I'm going for this because it has over 90% probability, and then I'd be working this. And if it gets here, I come back across here, I can get long to come back there. I'm in a rotational balanced trade. So either you're out of your short or you never took a short and you're looking for the long and this is the trade. This is strictly reversion trading, specific plan. Now what? Let's watch. Where are we trying to go? There. And where's my liquidity stacking? Here. And what's sitting over here? My IB high. What did my context grid sheet say? Possible neutral day. If I'm still inside of value and I can't get outside of yesterday's range, which is out here, yesterday's high, I'm still going to rotate. So when I come out here, what's above here? Stops. Where would my next target be? Here and here. Over 98% probability to take yesterday's ETH, I should say, high-low. Why wouldn't you be going for that? And why wouldn't you be managing your trade? So if you come outside, you got your helmet on, you're having a wonderful time. And what happens up here, Tom? Sweep. Uh-oh. What happened over here? Sweep. Liquidity. Reversal. Let's come back. What are we thinking about here? It's going to go higher. Oh, brilliant. You're so smart. No, you're not. What you are is following a plan. There's the sweep. Warning, Will Robinson moment. What is happening? Sellers, 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 location, location, location. If I fall back inside, I go all the way back down. It's called balance. This is trouble. Now I have to monitor. Let's look at the trigger. Now, in TraderLab, I always am saying, nail one side. You're not here to be thinking about P&L. The path to the P&L is being able to trade, isn't it? If you can't trade, there's not going to be a P&L. So, does that make sense? Learn to trade. I believe anyone who comes to TraderLab can learn how to trade, but they have to. You're going to find what is the main obstacle to sustainability. It's not learning how to trade. You can do that in TraderLab if you choose to and do the work. What you have to overcome is yourself, because you're the one who's going to take yourself out of the business. This is your liquidity. So as we're coming up, I'm looking at these areas for possible resistance. My buyers are taking on these sellers and they're eating them up. So as far as I know, going higher. The sweep puts the antenna up. Warning, Will Robinson moment. There's my sellers. I'm now below my buyers. I have a micro high volume structure. This is mean reversion in micro. This is your little mini mart again. Let's come back. Got to show it to you. So I don't know what's going to happen, but I know where it might happen. And I also know what the structure looks like. And it doesn't mean that if I get this and this, that it won't go higher. I will take stops. Casinos pay the gamblers. Get over it. And you gotta. If you can't handle overhead and costs of production, how can you expect to have a business? You have to reframe your experience of these elements, stops. If you ran a store, wouldn't you expect to pay bills? Would you be traumatized? Did you do something wrong? Did you not get your ego validated? You know what I'm saying? Because you wrote out a check to a vendor? Can you see stops as overhead and costs of production? Now, here's a little thing to think about. And I was talking to one of our traders at TraderLab the other day about this. If you know you're going to have feelings, why would you not acknowledge that you will have the feeling? And why can you not learn to anticipate it and let it be like a wave that rolls over you, not something you try to stop and put your hand up? You're in an ocean of chemicals in your brain and hormones, fight, flight, FOMO, all the rest of that jazz. It's primal, it's wired into you. Consciousness does not supersede it. Survival supersedes your intellect, the reptilian brain, survival of the species. And the brain, if you will, and the primal wiring cannot differentiate uncertainty from a threat. And so you're always threatened. So your mind and your wiring is always in this response. Cortisol, fight and flight. Oh, I don't know. I got to be sure. Is there a saber-toothed tiger there? Your brain cannot differentiate. What you need to learn in trading is not only how to trade, but to anticipate the responses to the uncertainty and the triggering mechanisms, and to know they're going to be there, to anticipate they're going to be there, and to know that managing the wave of emotion because you know it's coming and that you have to let it roll over you. That's what I had to do. And I tried for years to stop it. Didn't work. So instead, I had to change how I experienced it. Anticipate it. It's never going to stop. So how do you stop making errors? By anticipating the things that cause the errors. Not getting myopic and forgetting that Hyde, Jekyll and Hyde. Jekyll's intelligent, right? A scientist. Intentional. Hyde's the lunatic. We are fighting Hyde, and Hyde is us. And that's the primal wiring. Hope that makes sense. You can learn about that in TraderLab. And I can assure you, no matter where you go or what education you get, if you can't execute and follow a plan, you're on your way out of business. Has anybody ever really talked to you about it and how to solve for it? You can learn that in TraderLab. So this is a what's happening in trouble in River City moment. Break low, sellers took control. This is now resistance, and this is order flow. Now I have the IB. What is the IB in balance? If I come back inside, I'm going here. I'm in a two-sided trade. I can sell this and either get whacked with everybody else or whatever. Watch. Short scale. This is called reversion trading. It's just a plan, And this is the IBF. This is called the dual IBF. It's in the 60 PDFs. What I'm doing with this is a short, and where's the long? Wasn't it the same trade from the other side? You see? Down here, IBF. See? Rotational trading. So that's what this thing is. You're just going, it's like riding an elevator up and down until it changes. Let's watch. VPOC migration. This suggests now that the value is moving lower. So if we come out down here, then our next area is 45, because now this is the retail price. And if I fall out the bottom, I can extend lower. But I personally, and I'm just telling you personally, I would right here, I'd just be trading to the outside edge. That would be it. It can go lower. It doesn't matter. See what we did? Balance. Makes you want to hit yourself with a cast iron frying pan, doesn't it? So I always suggest to traders, Just trade to the stats. Understand the condition of the market. When you come under here, you probably think it's going to zero, right? It might, but in the meantime, it's rotational. Your trades might only be outside in until it breaks away, and then maybe you don't have a trade. I say maybe because it's all plan-based. If I come back here, what does that say? Maybe it's too high if I leave it. So what you have here is rotational trading. Now let's look. Now this might not be aligned with your plan, but let's look at language together. Hold on, let me show you. Now I don't call trades. What I'm trying to do, and the purpose of the stream is to show you market mechanics. Inside of these behaviors, you can build out a plan. Let's try to see what this looks like. This is called VPOC migration. What's going on here, the language is saying, I'm not paying that. Remember how this works in all time frames. I'm not paying that. Mini mart, retail price. This is reversion. If I come back out here, I can come back up here. However, if the volume is moving down, now the volume or the shoppers are saying, that's too high. And this can become the new retail price. If I break away from it, this might now be too high, and that might be too high. Let's see what it does. This might be too high. There's a test. Moves down. That is too high. That is too high. That is too high. This interaction is an order flow trigger. It's either cover is short, and this, by the way, is a target. 67% probability. And now we pull back. Now it can be done there, and you're looking at reversion. And if you took a long here, you're looking to come back here, you would scale, and then you're looking to still come back across the range. Reversion. You see how this is working? So when you come out here, this is reversion back to yesterday. This is an order flow trigger. You get, let me show it to you. Now, guys, don't think you can just look at this and do this. It's not about taking all of these. It's about anticipating locations and then looking at behavior. Now, right here is an order flow trigger. And this right here is support and resistance, basically. So, and I'm at a location. Right here, I have no idea if it's going up or down. 45 is my next target, but I break high right here. Now, I have a change. You see the change? I have the buyers. Were they here? I don't know. Do you see them? So the buyers are there, and there's the absorption. I don't know it here. As far as I know here, sellers are in control. That's the change. Now I'm above them. The buyers are here, by the way. And there's my support. So I can get long. And if I do get long, I got to keep my stop under here. I've got to get risk neutral. Full session VWAP is there. So you'd be risk neutral, and then it's reversion. And you're going for the VPOC, which is this right there, because that's reversion. Now, the idea of the trade would be to come across. If I don't get over here, then I can be rejecting it. But the primary idea of this trade is to go there. And then either it continues or it falls out. One or the other. Let's see. Where are we? Boy, this thing is having trouble. Okay. Liquidity, sweeps. This is hard for somebody who doesn't have a plan for this. Now, the thing that's important to know, when you have a trade plan is you're waiting for your trades. You're not trying to, like here's an example of something. Let me show you this. I haven't seen this, so I'm doing this with the benefit of hindsight. This is an order flow trigger right here. It's the same. Let's come back. Let's look where it is. Now, this is more advanced. You can learn to TraderLab. Remember what this is. I had buyers here. When I got back above it, it was a long, right? To there. When I come back to it again, I still got my buyers. Now, the thing to know, if you're in TraderLab, this is a sweep and a sell right here, or an exit, either one. When I come back the second time here, this is support. If I took a long here, if I did, I would get risk neutral and I get taken out. If I looked at this and said, because I didn't get over this, which is the way I'm going to say might, because I'm not saying I would. I'm just giving you the maybe. If I bought this, I'd get a scale and scratch. But if I get under here, break low, what is this? It's an order flow trigger. Then where am I trying to go? 45, which is intermediate time frame, high volume. In other words, coming here is high volume. Going up to an intermediate time frame, same. When I come down here, it's going to 0, right? Let's go look. Where am I trying to go overall here? There. Because I already got the value area high, and I didn't get the ETH high, and there's over 98% probability I get an ETH high or low, and I don't have to do either. I may be working towards this. But here's the but. Since I'm a day trader, I don't forget, support, don't forget, short or exit, support, alignment with the order flow, break low, support, sweep, counter rotation, sellers are here. Why is it not going up with those bubbles? Absorption. So right here, I can sell this because, and the reason is I have statistical probabilities. And just to give you a little more spice, what's that? My retail price on a higher time frame. I'm now below it and I'm returning. It is resistance. If it's too high, I can sell it here and I'm going to go for the ETH or the value area low and the ETH low. Statistical probabilities. I get a sweep here into liquidity. What does that tell me? Potential for counter rotation. Does it tell me to get long? Not necessarily. If I'm trading a primary side, which at the moment is down, I'm only taking shorts. That's it. So right here, I get my sweep. I get my liquidity. Trade management. Clueless. It could be there. It could be here because my sellers are here. Let's look here very closely. Now, what I'm doing is I'm compartmentalizing structures. And because I don't know what it's going to do. So let's not be concerned about this being right stuff. If you're worried about being right, this isn't the right business. This is a business of alignment, narration, and defining what changes. I don't know where it's going to happen. I know where it might happen. I don't know what's going to happen. So I got past that. It really disturbed me because I spent years trying to know what was going to happen and being right. Not the business. So this is where the buyers are hanging out. This is a sweep. When I see this sweep into the buyers, if I don't get below them, this becomes support. There's my buyers. Here's my test. If I don't get under here, I can buy this or I can cover my short and forget about it, as they say. And then I get my rotation. Now, what? Well, I can be done. I can be back in my Barca Lounge, or I could be looking for continuation shorts based on statistical probabilities. And I take stops, you take stops, what are you going to do? Oh, here we are. resting liquidity, IB. Let's watch in this area. Let's see what it does. Sorry, I can't see your questions if you're in YouTube. This is where the sellers were. This is the mid and the VWAP. Here's the liquidity. This is the IB. I have stats open below. This is an area to observe. Gee, this poor computer. Guys, remember, if I crash, I'll try to come back. I'm having substantial problems here in Costa Rica. Computers, basically, think of a bug laying on its back. That's what this thing is. Absorption, resting liquidity, IB. There's a potential short here. We are in balance. You have to be careful that we can come all the way back. This would be an area of a potential rotation. I consider this somewhat aggressive. I have stats open below, so I can look at this, but I can have to be very, oh, I guess that was a good entry. Does this make sense? Now, this is a structured trade. I consider it a little bit more nasty because of balance. But statistically, if I'm outside of the IB and I don't yet come back inside to what's the developing balance, then I might continue down. And I don't get above this. That's the other piece. Then I might go to these statistics and test. Remember, over 98% probability to take the ETH high low. We did check the value area high, came back in. Doesn't that set this up? So that's what puts me on the shorts, and I can get abused naturally, which is part of trading, overhead and cost of production, and it never has to do this. So you have to know you don't know. You also have to know you're not in the prediction business. Again, we're in the alignment business. This is a short in the TraderLab for me. And if I put it on and it doesn't work, I pay just like you do. Does this make sense? So this is a short. This is a structured trade in the TraderLab. Are you guys tracking? Please give a like if you're visiting in YouTube. Hopefully next week, I'm going to be back in Chicago, hopefully. And hopefully I'm going to have a replacement computer temporarily, so I'll be able to stream in a more stable environment than here. I'm at the edge of the jungle here in Costa Rica, and it's about 89 degrees at the moment. I don't want to say it's uncomfortable, but I will say it has its specific challenges. Oh, there's something very large on the monitor screen here that's walking across it. You never know what you're going to come across here. I think I told you the story the other day that there was this snake crawling around, and one of the cleaning people came by with a machete and whacked it. I was appreciative. So this is a short. The goal of any trade you put on is not to be right. It's to only trade in alignment with the condition of the market, which changes. So this is an alignment business. We're not predicting. I know I have now statistical probabilities that favored the downside. I don't know that when I'm on the long trades headed towards the same probabilities on the upside. So if I know I don't know, I'm not in the business of predicting. It's so important to know I'm in the alignment business. My alignment now suggests, since I'm outside of balance, I'm under this, that I can explore the other side. That's all. And the other side, and I don't know where the outside edge is. This is part of the thrill of randomness. This is the outside edge. Now, is it going to get there? It never has to. This might be the low of the day, right? So I'm not in that business of predicting. I'm in the business of risk management, getting risk neutral. Where does this trade fail? Not where do I fail? I only fail if I don't follow my plan. And how do you measure yourself, by the way, in this business? I know all of you look at your P&L and you trade your P&L. The P&L is the output of trading the plan. It doesn't work the other way around, that you're trading P&L and somehow you're going to actually get that. You're not. That's the reason you won't. The way to get the P&L is the plan and the discipline to follow it. How do you judge yourself? Forget the P&L. The P&L is going to be there if you can actually execute a plan that has an edge. This plan, in spite of everything that happens, has an edge. And over time, even though I take stops, even though I'm going to have losing days, even though a tweet, somebody tripping over the cord at the CME, which by the way has happened, 911, all these things I've traded through, 87 market crash, .com crash, Desert Storm, currency crises, hedge fund collapses, so many things. But because of a plan, I'm still here to talk about it. Not every day is pleasant. And when there's outlier experiences that you have no control over, you have to be adequately capitalized. And it's part of the distribution of randomness. You got to know it's in the cards. It's going to happen. So in the meantime, what do? Follow your plan and you grade yourself on what you did. If you're trying to be a flip-flopping like a cat on a hot tin roof and you can't trade one side, you're going out of business. Now, the thing is, what do you have control over? You have control, hopefully, over yourself and the choices you make. And you're going to have to work very hard to have control because the forces that are at work in your psychology are going to overwhelm you. You can even know what you're supposed to do, but what happens when the hand grabs the mouse and does something anyway, in spite of what you know? Do you understand the mechanism that's doing that? And do you know what you can do about it? Do you want to do something about it? That's why I created TraderLab. That's why I decided to work with Bookmap, because their tool, and I've done a lot. I've worked with hedge funds. You guys know about my background. It's a fund manager, had my own company. I've got 47 years of doing this. And I went down every dead end you've gone down. And always I had winning trades. The winning trades were not the problem. And you think, like most of us, all I need is more winning trades. I don't think it's that simple. It wasn't for me because I spent years looking for winning trades. And what I did is always had winning trades. You have winning trades. But if you don't have an edge, you're still going out of business. Gamblers have winning hands. How does it work out for them? It's the same. You have to decide which side of the table financially that you want to sit on. That you have a choice. You have to also understand that if what you're doing now doesn't work, I wouldn't anticipate it's going to change. Your effort is not the issue. You might be trying to work and fix a defective process. You can't fix it if it's defective. So all that energy you put into a defective process is not going to change the outcome. So the question for you this weekend to ponder, is it you or is it your process? Is your lack of discipline because you don't know where the trades are that have edge versus the trades that have random winnings but are still going to be losers over a distribution of samples? Do you know the difference? If you can't answer the question, you're sitting with the gamblers. And I always say, take a few dollars, go with your buddies, go to casino, get the cocktails and the ticket to the buffet. That's entertainment. That's how I see it. But this is business. You have to decide, are you here for entertainment, to play a video game and get your dopamine fix? You know how you feel when you're playing a video game. You know, shoot, get shot, all that. It's the same here. But that's not a business. It's entertainment. You have to decide. By the way, what about this 45 level? Isn't that interesting? You see? If you know this, you can't predict it, but you can target it, can't you? Is this something that's interesting to you? Where did this level come from, you're asking? Here's your 45 level. That's your high volume. Here's your naked volume point of control. Once we got under there, that's the next level. Value area low is down here, and the ETH low, that's a potential target. If I can't get below here, I could do whatever it's going to do. Do you know what it's going to do? I don't know what it's going to do. So instead of trying to figure out what it's going to do, I try to align. Here's what I know. This is, by the way, the volume profile. This is the retail price in this distribution of volume. Too high, too low, mini mart. Oh, it's too low. We leave the store and we can potentially come back to this retail price or high volume. I'm going down in time frame as you think of it. Retail. This was maybe too high. Well, if that's too low, I can visit too high. If this is now too low, I can come back up here. I can go wherever. If I spend time over here, the high price for the day, if I spend more volume down here, says that's too high, and maybe this will become the fair price. It's always moving. So you think of time frames, I think of rotations and auction. And as I go down in time frame, as you think about it, get that ant off the screen. I'll tell you, these ants, you put a saddle on them. If I'm under here, where am I trying to go? Where am I trying to go? Isn't this it? So what I can do with this, and what was this? Such a surprise, isn't it? That's a potential short right there. What does it line up with? Here, you see it? And I think I already talked to you about this one. It's right over here. And this is the IB. This is a short. I think I just narrated this one. I can't even remember. Yeah, I did. This is a short. And you're going to try to go here and down here because of statistical probabilities. You don't have to take any shorts, and you could just be out of this thing right here. Get back in the Barca Lounger. That's how complicated this is. Is that making sense, guys? First, I'm not looking for overnight high. I'm going with the flow. And right now the flow is, and here's another question for you guys. Very astute, right? The market went up yesterday. So what do we have in the market? We had shorts that are still in here. We did not get outside of value. We tested it. We didn't get to the stats on the upside, ETH high. We're falling out the bottom. We're now falling out of balance in the developing daily time frame. Here's value area low developing. I'm below naked VPOC. I'm below microcomposite VPOC. I'm getting below this, and where's my stats first? Not a recommendation. Put the helmet on and strap yourself in. Manage your trade, right? So to answer your question, no. The other side of balance. And who's on the hook? It changes in different time frames. Who's on the hook? Shorts were on the hook. They got squeezed. Now the longs in here are getting abused. This is where I'm looking, and it's not a recommendation. What is it? Market mechanics. Guys, please give a like if you're visiting in YouTube. Thanks for visiting the TraderLab. Appreciate all your patience with the challenges while I've been here in Costa Rica. You're the best. If you're in the TraderLab, appreciate everything you guys do, all your support. Thank you, Bookmap support, for keeping an eye on things here and keeping this stream from going off the rails too far. Review these streams every day, builds on the one before. There's a library of webinars. If you're inclined, use the link in the bottom of YouTube. If you want to visit the TraderLab community, there is no cost for it. You're all invited. This is what it looks like. There's a lot going on. You can see it's a very active community, but please understand it is professional. It is not romper room. Here's the library of webinars. Start with this one, the primer. It's got over, I don't know, 38,000 views, and there's a lot in here. Some of these go up to 4.5 hours long of real-time narration. You can see this unfold. Also, TraderLab's available to you. Thanks again, guys. Don't forget to leave the like if you're visiting in YouTube, and I look forward to seeing you guys, hopefully, from Chicago on Monday.